Hi, I'm Jeff Turnhoy, Head of America's Research at Lipper, and today I'm joined by Jim Kieffer, Portfolio Manager for the Artisan Value Fund. Jim, thanks for joining me.
It's great to be here.
Well, Jim, your fund is being honored as a top large cap value fund over the past 3 years. Let's talk a little bit about this fund's strategy.
It's a classic value approach. We seek cash-producing businesses in strong financial conditions, selling at undemanding valuations. What that's meant to highlight when you really think about it is a high level of risk awareness. Each of those elements are oriented towards keeping risk at a lower level and making sure we're being rewarded properly for what we get involved with.
So would you consider that more of a top-down or bottom-up process?
It's a bottoms-up approach, without doubt. That doesn't mean we ignore what happens on a top-down perspective, but each name is driven by a bottoms-up idea, and you want to be aware, though, of the top-down fundamentals that are impacting the business.
So would you consider that process more suitable to your aggressive or conservative investor?
It probably has a more natural fit with a conservative investor, just the idea of having risk awareness rather than just going all out for returns. I think that probably is the best match there.
So a lot of people were surprised by the success of conservative strategies in 2011. Do you think that's something that's likely to continue this year as well?
Markets move around all the time. You know, they're either risk-seeking or they're risk-fearing. Right now, they're risk-seeking. You kind of got that risk-on mentality that only has so long of a life before people adjust otherwise, so it's hard to tell. But I think of our process as working through a whole market cycle, that we do best in the risk-fearing markets, but we also participate in the risk-seeking markets.
One interesting twist on your portfolio is you have a pretty high concentration of technology. That seems a little unusual for a value manager. Can you elaborate on that?
We do probably have more than others, but we're opportunistic and we go with what matches up with our approach. And right now, technology really stands out as an interesting sector. You have great free cash flow production there, you have very undemanding valuations, and you've got some of the strongest balance sheets in the industries.
So was it those lower multiples that led you into technology, or was there a bigger theme in place?
No theme. Each name came in one by one, but over time I think they accumulated partly because people got bored or growth slowed in the technology sector, and that allowed us to accumulate names.
Okay, so you see technology as being one of the pivotal roles in your portfolio. Is there another area you think is worth mentioning?
Our financial sector exposure is significant, but it's also quite different than the index, let's say. There's a lot of property casualty names in there. The property casualty industry is suffering from its own issues that are different from banking right now. Excess capital, but you've got some of the best of breed operators selling at or near book value, and we think that's a terrific opportunity.
Do you think some of the issues going on in Europe with respect to their banks might bleed into the financial markets over here?
It's an unavoidable risk that should something serious break out over there, it's going to impact here. I think there's no denying that.
Well, thank you very much for your time, Jim.
Great.
Appreciate it.
Thank you.
I was speaking with Jim Kieffer, Portfolio Manager for the Artisan Value Fund. On behalf of Artisan Partners and Lipper, I'm Jeff Turnhoy. Thanks for watching.